we looked at the general business overview. So we started also the second parameter or the second header, which is the analysis of the business model. And if I could remember, we were in number 3, the third point we were given under the business model. Okay, so let me just do a quick recap. From the analysis of the business model. So let's recap quickly from number 1. So we're talking about the second header, which has to do with professional tools, the use of professional tools, and we talked about explaining the model. We said the Balanced Scorecard Model is a strategic management framework that organizes or makes that organizations use to translate their vision and strategy into actionable objectives. And we looked at these 4 perspectives, which is financial, customer, internal, processes, then learning and growth. We also mentioned who developed it, and they include Robert Kaplan and David Norton. Though it's not necessary to mention that, but when you are explaining the model, you just need to properly capture the perspectives. So the perspectives are more important than the proponents or the founders of the model. So we talked about the first point is about the approach and what the Balanced Scorecard Model does, what it integrates the financial and non-financial perspective of a business. We also looked at what it allows companies to do by assessing operational effectiveness, customer satisfaction, and employee development, ensuring alignment with strategic goals. This comprehensive approach not only facilitates better decision making, but also fosters continuous improvement and innovation within the organization. So we quoted the appendix where we drew the model. The second point we want to pick is, or we want to state, is what the 4 perspectives are all about, which we will need to integrate into the case we are looking at currently. So we looked at the financial perspective, which focuses on revenue growth, profitability, return on investment, and assessing how well the organization is achieving its financial goals. So this is important to understand on the Balanced Scorecard Model. While the second perspective has to do with the customer, emphasizing satisfying the customer, retaining the customer, measuring factors such as customer loyalty, market share, quality of service delivery, to ensure that the organization meets and exceeds customers' expectation. So that has to do with the customer's perspective, and I think it's comprehensive enough. And the internal processes examines the efficiency and effectiveness of internal operations, how you carry out your day-to-day transactions, reflecting your customers, and how you attend to them and providing the service or the product, bringing value creation and ensuring they align with strategic objectives. And finally, the learning and growth perspective highlights the importance of employee development, innovation, training, organizational culture, measuring how well the organization fosters a capable workforce, creates a conducive environment for continuous improvement. So these 4 perspectives enable organizations to create a balance, and that is why it's called Balanced Scorecard, which in turn drives long-term success and sustainability. So we looked at those 2, and we'll continue from there, which is number 3. So we said the third point is that the Balanced Scorecard is very important because it's a holistic framework that captures the financial and non-financial metrics in the organization. So once you integrate the financial perspectives, it encourages alignment with strategic objectives. It also enhances the managers to identify and address key KPIs like the customer perspective, also the internal processes, and this would help also address the learning and growth perspective, and also it aligns with the organization's strategy. It helps improve accountability, motivates employees by linking performance to broader organizational success. So ultimately, the model supports continuous improvement and strategic adaptability, allowing organizations to navigate changing market dynamics while maintaining a focus on long-term growth. So this third point basically is talking about the value balanced scorecard brings to any system. Now, the fourth point we'll look at is applying it to MNC. So the first 3 points is explaining the general use, the value, and the integration of Balanced Scorecard. But then, with specifics to MNC, which is Magic Network Communication Limited, our study, we're applying it briefly. So, from the financial perspective, we will see that the revenue of MNC in 2015 was about 522 billion, profit before tax 28, and also this shows that the company has a strong market position. Then from the customer perspective, you see that 40% of the customer base increased in 2015 from about 3 point something million customers to 4.9 million customers. So showing that there's commitment to customer satisfaction and resolving every complaints, ensuring service delivery. Now looking at internal processes, from MNC, we'll see from the case that MNC invests in research and development, enhancing service offerings and streamline processes. Of course, there are challenges, but despite this, the increased demand of workforce training keeps coming. And that comes to the last point, which has to do with learning and growth perspective, which emphasizes the importance of employee development. So MMC recognizes the need of training newly hired staff to meet customer expectations and remain competitive in the rapid evolving market. So overall, the Balanced Scorecard model helps MNC tracks these 4 dimensions, ensuring alignment with strategic objectives while addressing operational challenges. So using the professional tool of this model, you see we've gotten 4 points which we've spoken about. There are others you could integrate from the case, but then you've achieved superior achievement by bringing these 4 points to bear, which is very important. Okay, so let's look at our third header quickly, which is analytical skills. Let's analyze the business model with the case and blow it up. Let's blow it up by elaborating on what we just did on the second parameter, which is the 4th point. So let's blow it up here by the header. And here we are displaying our analytical skills, which is business model perspective discussion. We just call it business model perspective discussion. So now let's blow it up by saying the first parameter, which is financial perspective. You see that MNC has significant challenges and operations and opportunities in the performance or the KPI between year 2014 and 2015. So we looked at the gross profit margin moving dropping from 18.8% in 2014 to 17.5% in 2015. You can see it indicates that there are increased cost and pricing pressures. Now you see from also the ratios that net profit margin dropped from 8.1% to 5.5%, suggesting a deterioration in overall profitability. And this will raise concerns concerning cost management and pricing strategies. Now the ROAS, which is return on capital employed, decreased also from 13 to 11%. This shows efficient use of capital to generate profits. Current ratio also dropped from 0.8 to 1 in 2014 to 0.5 to 1 in 2015, showing liquidity issues and risk of inability to meet short-term obligations. You could see gearing stood at 32.2% in 2015, suggests a moderate level of debt in the capital structure. In 2014, actually, there was no debt, or in 2015, they had to incur some debt. While the propriety or equity ratio decreased significantly from 67 to 47%. So this indicates reduced equity financing and introduction of debt. We see that the debt ratio also shows 22.6%, highlights a balanced approach to financing, but could indicate a vulnerability if the market worsens. So you can see that we've integrated the financial aspects into the ratios we calculated. And that's how to answer a model-driven question. So you do a general overview with data from the manuscripts. Then you use your professional tools to explain the model, which is the second header. Then the third header, in performing or harnessing, showing your analytical skills, you bring out the model in relation to the numbers, the figures you've been talking about. That's discretely how to use the model to speak to the numbers. So now you see from the financial perspective and the ratios we've calculated, you can see that we've collectively used these financial metrics to underscore the need for MNC to enhance its operational efficiency and focus on cost controls from these ratios we've calculated. And this has helped us integrate the model into the company's numbers. So we quoted the appendix, we say see appendix 2. Now from the second point we could pick, we've just talked about financial, then let's elaborate on customer perspective. From the exhibit, you will see that MNC had a rapid growth, showed a rapid growth in their customer base, which expanded by 40% to reach approximately 5 million subscribers in 2015. Now, this surge indicates a dramatic increase in customer complaints. So you see their customer complaints grew from 131,000 in 2014 to 753,000 in 2015. Additionally, the percentage of complaints resolved fell sharply from 90% to 63%. So the challenge of addressing customer complaints have increased, and satisfaction of customers also have reduced. You see that the average service delivery rate from the case also decreased from 7.9 to 57%, suggesting that the quality of service has deteriorated in the face of increased demand. So the surge in the numbers has affected the customer's experience. Furthermore, the willingness of customers to recommend MNC decreased from a rating of 9 to 5. You see, customers from the survey, customer satisfaction survey, so they showed that with the surge in the number of their database increasing, they would risk losing customers to competitors because of service delivery. These issues signal the urgent need for MNC to enhance its customer service capabilities, invest in staff training, and improve operational systems to better meet customer expectations and sustain its competitive advantage in the growing market. So you can see the second point now, we've fully blown out customer perspective based on Balanced Scorecard Model. And from the numbers and the data provided to us, you've spoken to it. So from what has been provided to you, just speak to the numbers, ensure that you integrate whatever it is in the case to what the model is talking about. So first, you must understand the model and be able to integrate the model into the case that is presented before you. So let's look at the third perspective, which has to do with learning and growth. Now you will see that the customer base from 3.5 million to 5 million in 2015, MNC has recognized that the workforce has not adequately scaled to meet the service demands, leading to the hiring of many new employees who often lack the experience to deliver high quality customer service. So there is a gap, and this gap needs to be breached. So MNC has acknowledged a rising cost in training and development. So to equip these staff, they need to support them with much more training, onboarding, and other customer service skills. So the establishment of a research center and focus on innovative product development highlights the company's commitment to continuous improvement and adaptation. So it's very important that the training framework is set up to ensure that the workforce remains utilized. So prioritizing comprehensive trainings and programs, knowledge sharing initiatives to empower employees will foster a culture of continuous learning and ultimately enhance overall service delivery. This is important because as employees, you need to be trained and retrained. You need to be learning and relearning, not just giving into the business. Even if you're coming in new with experience, you need to be trained, and this area cannot be overemphasized. It's very important that companies take learning and growth very seriously by not only taking out of staff. So you see, when staff come and they work, it may result in burnout. But then when you go for training, you go for conferences, you go for webinars, you go for retreats, you are refreshed and you come back with fresh fire to carry out your duties very, very adequately. All right. So having looked at learning and growth, the internal processes perspective also comes to bear here. Now, with the rapid growing rate of the customer or subscriber base, we'll see that customer satisfaction survey with the complaints show that our internal processes have some hitches, and this suggests that customer service and support may not sufficiently be equipped to handle the surge in this demand based on this complaint. So since the company has undertaken to recruit more staff, now this new staff need to be able to address these challenges after they've been onboarded and trained. It's very important so that the internal processes can be seamless. In addition, MNC's commitment to research and development also is an effort from the case we saw to innovate and improve internal processes. But without robust systems and trained personnel to operate those systems, the full benefit of these initiatives may not be realized. So MNC needs to streamline, better support customer interactions and operational efficiency. This is important. So you see, we've integrated the 4 perspectives in these first 4 points. Then also, we now, in the 5th point, talk about the relevant ratios, including gross profit margin, net profit margin, ROAS, and the current ratio. And we talked about the gearing ratio, the propriety ratio, and we looked at how they affect MNC and how important it is to address the financial perspectives of the business. So this is very important, and this will help the company understand how balanced scorecard comes to bear. If you look at the final statements in that 5th chapter, we said collectively that these ratios point to challenges in profitability and liquidity, necessitating strategic focus on cost management and operational efficiency to enhance the company's competitive position in the telecommunications industry. So we quoted the appendix 2. So speaking to the numbers, you just use it to align with the model and how it applies graphically to the organization in question. All right, so the 4th header we'll talk about is the challenges and the considerations. What are the challenges based on the use of the model? So the first challenge we want to see is that Balanced Scorecard offers a comprehensive framework for performance management by integrating the financial and non-financial perspectives. But it's not without limitation, because the Balanced Scorecard model is not a full answer to their questions or to the challenges of MNC. So we also looked at this parameter that this model, if implemented, can be complex or resource intensive, in the sense that significant time and effort to gather and analyze data across these 4 perspectives may be challenging. So organizations may struggle to align with all employees and the strategic objectives outlined in the Balanced Scorecard, leading to inconsistent focus or prioritization. So if not regularly updated, the model may be outdated. This is one of the challenges of using the Balanced Scorecard model. So failing to adapt to changing market conditions also and organizational priorities will diminish the effectiveness of driving performance improvement. So the model needs to be used regularly and updated with the data of the organization, which is one of the challenges with the BSC model. Okay, so secondly, we look at the addition. In addition to this first challenge we spoke about, you'll see that Magic Network can also use other models to enhance performance and strategic alignment. For example, the performance prison model emphasizes stakeholder satisfaction. It has 5 facets that has to do with stakeholder satisfaction, strategies, processes, capabilities, and stakeholder contributions. So this model can be an alternative that may align and integrate MNC's system and data better than the Balanced Scorecard model. You see, this approach not only ensures that the company focuses on financial metrics, but also considers the need of stakeholders, customers, employees, and investors. So the Balanced Scorecard model just spoke about the financial and non-financial aspects, but the perspective of the investors also and employees was included in this performance prison model. So we could recommend that to say, okay, one of the challenges, the limitations, is also solved in the performance prison model. It's just a recommendation or a challenge we are bringing. We also talked about value-based management model could also be beneficial as it aligns with the company's strategies with shareholder value creation by focusing on cash flow and economic profit. So this value-based model looks at value creation and being more owner-centric, generating value for the shareholders of the business. Another model we speak about is the lean management approach, which can help MNC improve operational efficiency by minimizing waste and maximizing value. So these models can be tailored towards specific operational needs of MNC and strategic goals, providing a more holistic view of performance and sustainability. So the Balanced Scorecard is good, but then it has its own limitations, and these other models we propose could also do better or lesser based on the application of it to MNC's case. It's just a recommendation, but then the Balanced Scorecard model is also good. It's just that what we are saying is challenges and considerations. So this second point is a consideration we are presenting, and it's essential in case study. Okay, so the third point is outsourcing certain staff function instead of hiring full staff. Less qualified employees can be a strategic solution to the company's operational issues, and it could drive operational efficiency and maintain service quality. So most banks today and other organizations outsource certain of their staff functions, which will help them not only access a pool of skilled professionals, but also tailor their specific needs to those roles like customer service, technical support, or IT services. So outsourcing most of those staff, you see that banks reduce costs, those fixed costs associated with full-time employments, benefits, and training. Outsourcing this staff can free up all those internal resources to reduce operational costs, because you could see their costs were rising between 2014 and 2015, and the MNC can focus on core business activities and innovation to improve customer satisfaction and service delivery by only outsourcing most of their staff function and not recruiting from within. So it's a consideration also to look into, which we are proposing from the case. Number 4, we're looking at the increased subscriber base presenting significant opportunities to enhance revenue generation, brand loyalty, and market penetration. So this large customer base pool has helped MNC to target market strategies and personnel services that will help cater to diverse customer needs, thereby increasing customer engagement and retention. So we're also looking at exploring data analytics on subscriber behaviors, which can help develop new products and services to enhance their customers' experience. So exploring this partnership with other businesses across promotional and bundled offerings, you'll see that value could be maximized for customers and capturing additional revenue streams. And MNC can solidify its competitive position with this recommendation in the telecoms market. So their increase in subscriber base is actually an advantage, and it will help really boost their revenue in several areas. Okay, so the fifth one is a detailed and formal customer and competitor analysis. That is also a consideration to understand market dynamics and customer preferences comprehensively. So if they conduct this analysis, it will enable them to tailor their product and services effectively and also help them address challenges. Concurrently, you see that competitor analysis allows for a strength and weakness review of rival firms, identify emerging trends, and uncover gaps in the market that can be exploited. So this strategic insight not only enhances the company's competitive advantage, but also informs decision making. So this is another consideration to the challenges of meeting the growing customer needs. And we also look at decision-making processes, resource allocation, and marketing strategies to drive growth and customer satisfaction in the rapid evolving telecommunication space. So we have 5 of these considerations and challenges. So we've provided more of solution or what to look at, like considerations to management or to the board, to look deeply into this discussion and our findings that will provide comprehensive solution in their fingertips, at their fingertips. Okay, so we've spoken, we have 5. You could do 4 and you get your superior achievement based on that. So let's look at the ethics aspect, which is very important in the case study exam. So for the first 4 headers, if you decide to just write and not use any of those headers, this header is very important, which has to do with ethical issues, applying your professional skepticism and ethical issues. So this must be a separate header, just like you have your executive summary. All right, so critical matters and ethical issues. We're looking at the accuracy of the information provided by Magic Network, which is crucial in effective decision making and strategic planning. Now, we need to be skeptical about the data, especially where it has to do with significant achievements such as the increase in subscriber base, the operating profit. It's important to validate these figures against independent sources or audits to ensure reliability. So number 1, we are skeptical about the data provided, and we're skeptical about the financial statements also. So there was nowhere stated that the financial statements have been audited, and we are skeptical about that. So we need to point that out in our professional skepticism. So we're looking at the discrepancies also in customer satisfaction metrics and operational challenges, such as increased complaints and unresolved issues. Accurate reporting to truly assess performance and areas for improvement is necessary. So without accuracy and transparency of information, MNC risk informing stakeholders. This could lead to mistrust or distrust, which can ultimately impact its reputation and market position. So we are being skeptical about the financial and non-financial data. Very important. Number 2, we point out the case of non-disclosure of issues which imposed fines by regulatory authority. So during the meeting with our firm, these issues were not disclosed to us from the beginning. And in the first debrief section, we looked at that graphically, that the former auditor had to point it out to the new auditors that the company faces fines This undermines stakeholder trust in the company. Lack of disclosure can mislead investors, customers, and regulators. So hiding things, issues of compliance affects operational integrity. So the company needs to commit to ethical practices and willing to address issues squarely. So by not being forthright about regulatory penalties, the risk of damaging their reputation is imminent, potentially facing further scrutiny, which could lead to long-term implications for its operations and financial performance. So that compliance issue and the disclosure of the same is what we're speaking about here. And we are pointing it out as an ethical issue that should be brought to bear to ensure that they need to come out playing with their partners. The audit firm, our audit firm now, that are advising them that they've asked for reviews are partners, so they should disclose everything to us. This is very important for every business. Okay, so number 3, in addition to the ethical issues surrounding not disclosure, MNC must consider several factors: government policy, industrial regulations, regulatory compliance is crucial, operating licenses to avoid penalties which can affect financial stability and the company's reputation. So we're speaking here that MNC needs to comply with all the policies that have to do with the government where they are operating, or the economic or business environment, and to understand that failure to align with these external factors can lead to operational risks, legal challenges, litigations, and several fines and penalties. So the loss of competitive advantage with their growing customer base need to be addressed, especially in the telecoms business space. Also, we are skeptical about the increased dissatisfaction among subscribers at MNC is also an issue, and the risk of losing them to other competing network is imminent. It's very pertinent to address the lapse in service quality, and failure to address these could risk them moving to competitors. So, ladies and gentlemen, it's 7:40, and we have just looked at the 4th ethical issue. When we come back, we will look at the next and the last header under the we'll be continuing on our discussion on the case findings. All right, so our discussion on findings in the last class, we looked at professional skepticism and the ethical issues we spoke about. Okay, so now let's have an assessment and evaluation of findings, which includes our risk assessment. Talking about our risk assessment, now let's discuss this 6th header, which has to do with assessing the positive and the negative risks from the findings we have. So the first one is talking about the subscriber base and the growth has necessitated the hiring and retention of higher skilled staff to effectively engage with customers and address their evolving findings or their evolving needs. As the telecommunication industry becomes increasingly competitive, having knowledgeable and skilled employees is crucial for delivering value and also high quality services. This is very important to take note of. So we need to identify the fact that MNC needs to build a workforce that can foster strong relationships with customers, contribute to the company's long-term success, and also get loyal subscribers to the team. So it's important to assess that knowledgeable and skilled workers is crucial for delivering high quality service. This is important. So number 2, updating the customer database is essential to maintain accurate and relevant information about its growing subscriber base. So they could leverage artificial intelligence to improve their customer behavior, preference, and trends. AI analytics can help identify patterns, customer needs, and respond swiftly to changing demands. So this will enhance customer loyalty or satisfaction and also optimize operational efficiency. So this second is a positive risk we're looking at in leveraging AI, which is the in thing today. AI has come to stay, and it will help companies do more with less, in the words of the current Microsoft CEO. He said, artificial intelligence helps us to do more with less. All right, so number 3, we're looking at arranging training for all call center operators and consultants is crucial for Magic Network to ensure effective service delivery and enhance customer satisfaction. This is very important. So training programs focused on improving communication skills, product knowledge, and problem-solving capabilities will empower employees of MNC to deliver high-quality service and create positive customer experiences. This, in turn, contributes to reducing the complaints of customers and increase customer loyalty, supporting the company's strategic objectives. So this third risk is a positive risk and a suggestion to mitigate the issue of complaints in the area of customer service. Also, conducting a competitive analysis or market analysis is essential to gain insights into competitors' strengths, weakness, strategies, and market positioning. By understanding the competitive landscape, we know that Magic Network can identify opportunities for differentiation and innovation, allowing it to tailor its offerings to meet customer needs. So we're looking at a risk in this perspective that if this thorough analysis is carried out, this can enhance strategic planning and maintain competitive edge in the rapid evolving telecoms industry. All right, so let's conclude by saying that Magic Network's overall business model centers on leveraging its rapid customer growth, while addressing challenges of several service delivery and operational efficiency. We conclude that focusing on a balanced approach with the Balanced Scorecard Model could help enhance customer satisfaction, improve internal processes, and foster employee development through growth and learning. All right, so addressing staff challenges, improvement in service quality, and conducting comprehensive market analysis are crucial for sustainable growth and also ensuring long-term success in the dynamic telecoms business space. All right, so the financial ratios, we're also concluding that the company's operational efficiency, profitability, and financial health, with the ratios we just looked at, could help the company make analytics or analyze their current performance to predict their future. So we are concluding to continuously monitor this ratio and identify areas of improvement, also evaluate the impact of strategic decisions, and benchmark performance against industry standards. So we need to analyze these ratios further and on a continuous basis to ensure that factors such as customer satisfaction and market dynamics are integrated and understood properly in the market in a bid to enhance competitive positioning and inform strategic planning efforts. So So we're also concluding on external factors such as government policies, regulatory changes, and tax incentives for telecoms companies can create opportunities for growth. So to avoid fines, penalties, unforeseen events such as economic downturns that can affect subscriber growth and profitability, Magic Network must stay vigilant and adaptable to these external influences and leverage positive developments while mitigating risks associated with adverse conditions to sustain its competitive edge in the dynamic telecoms industry. So, in addition to the balanced scorecard, Magic Network would benefit from employing other business models like Porter 5 courses, like SWOT analysis, pestle analysis, could help understand better the strategic framework of NMC and can enhance its operational effectiveness, adapt to market changes, and better align its resources with customer needs and industry demands. So based on these four conclusions, we've achieved superior achievement by stating at least 4 conclusions from our discussion. So what is our recommendation? So to enhance the CRM of MNC, we should implement comprehensive data interactions that help leverage analytics, that is AI, and big data to help provide insights into customer preferences, behavior, and satisfaction levels. Using these tools will help address the challenge with customer complaints. Also, staff should engage effectively with customers, coupled with regular surveys and feedbacks, which will foster deeper relationship and improve service quality by prioritizing responses and ensuring that customer issues are addressed promptly. Okay, so number 2, adequate economic and business planning for the company involves developing a strategic framework that aligns financial objectives with market trends and customer needs. So this entails thorough research, identifying growth opportunities and potential risks. So we're recommending that Magic Network should invest in technology and infrastructure that will additionally create detailed financial projections, cash flows, analysis, and can help the company to reduce its operational costs while ensuring adequate funding for expansion projects. So we can see that this review will additionally create financial projections and cash flow analysis, which will help them in this competitive environment and drive sustainable growth and profitability. So this second recommendation, it's adequate, or it is important to help them reach the market that present growth and opportunities to them. All right, so number 3, we're recommending that to increase revenue, they need to target untapped markets, that is virgin markets, new places, new fields, untapped audiences, rural areas, unreserved demographics. So if they expand to this region, it could enhance more traffic for the business, attract brand loyalty, and also meeting the unique needs and preferences of the population. So we're also recommending to explore partnership with local businesses and community organizations to facilitate entry into these markets and leverage their local knowledge. Okay, so significant revenue could be generated and help the company solidify its position as a leader in the telecommunication industry. Okay, so and the fourth and the final point on requirement 1, we look at to improve the financial and non-financial performance. Implementing the balanced scorecard model is very important. So the analysis is one thing for a company to analyze a model, but implementing is another thing. So integrating these KPIs for these 4 perspectives, financially, we are recommending that MNC should focus on enhancing the gross margin, net profit margin, and operational efficiencies to boost revenue based on those ratios that were calculated. Also, from the customer perspective, the company needs to address the rising number of complaints and enhance service delivery rating by implementing robust training program for staff, particularly in the call center. So we've stated the issue and how they should solve the issue based on what we are recommending. So based on the financial perspective of the model, the way to solve the issue is by increasing customer satisfaction to boost revenue. The second one, customer perspective, is by implementing robust training programs for staff, especially those in call center. While the third perspective of internal processes is to refine operational workflow to reduce complaint resolution time and improve overall service quality. While the fourth one and the final one is to invest in employee training to enhance that learning and growth, and also cultivate skilled workforce to deliver exceptional customer service, contributing to improved retention rates and reduce the attrition rates or the exit, staff turnover, and enhance long-term financial performance. So this approach will also help drive profitability and foster continuous improvement within the organization. So that's our 4th recommendation, and that will be the end of requirement 1. I don't know if we have any questions. ACAs on the call, do you have any questions for requirement 1? We just addressed the last part of the recommendation for requirement 1. Any questions, please? Okay. In the absence of any questions, I believe the silence means consent. We understand. We are waiting for the script or the suggested solution to also go through to understand graphically what we've talked about. All right, so let's dive into requirement 2. From my screen, you see that the analysis is what the examiner asks for of the product mix that will maximize the margin of MNC. It also said if no staff was to switch position, we are to calculate the total margin from the suggested product mix as presented to us in Exhibit 5. All right, we are to advise on how to allocate the existing staff between the 2 roles, operators and consultants, in order to satisfy the market demand working, with the assumption that the company cannot hire new call center staff. So our advice also includes business and managerial factors that should be taken into account when considering our recommendation. So that's requirement 2. All right, so having looked at the calculations on the product mix, so we want to speak to the numbers now based on what we've calculated and explained in the appendix. So also take note that in the appendix, I've provided a comprehensive tutorial for requirement 2. So if you see requirement 2, you will observe that I provided a comprehensive calculation steps to all the ratios that was provided. The marginal costing approach that was used and the contribution analysis, all I provided the calculations there for you to follow through. Okay, so let's go to the body of the work and the explanation to the numbers we calculated. Okay, so requirement 2, the header is there stated about an analysis and determination of the product mix. So the first overview of the product mix is that we're looking at a total demand of 5,750 inquiries across the various services. Operators spend an average of 12 to 16 minutes per inquiry. We also look at the workforce that consists of 100 operators, 85 consultants, and this amount they earn per hour. The prices for services ranging from 40 for MT to 300 for BIS, including varying revenue potential based service type. So we just speak generally to what is in the data for the overall product mix. Okay, so number 2, the staffing structure is what we spoke to, and the role flexibility as evident in the case. Operators can be trained to be consultants, allowing for career advancement and increased pay, while consultants can not only transition to operator roles without a pay decrease. So this flexibility can enhance employee satisfaction and retention. It also provides opportunities for skill development and career progression. We also look at the high reliance on consultants who require more time per inquiry, and also the need for careful workforce management to ensure efficient service delivery and optimal use of labor resources. So we are just using the general data in the exhibits to look at an overview of the product and service mix MNC has for the populace or for the public. So we also look at number 3 point. MNC outlines its commitment to enhancing customer satisfaction and service quality within its call center, reflecting the dedication and improvement in the CRM. Also looking at the proactive approach to strengthen competition in the market and competitiveness, also to foster customer loyalty and to sustain their growth and profitability. Just a general overview of the data in the exhibits is what we are speaking to. And number 4, the 4th point we talk about is the listing requirements and the market expectations related to service quality, customer satisfaction, and financial performance. So we also additionally said the government policies and industry regulations can also impact operational costs and market entry strategies. So understanding the economic landscape, including shifts in customer preference and competitive landscape, is essential for the company to navigate challenges effectively and capitalize on growth opportunities. So these and others are a general overview you could just speak forth or speak of in the first parameter or header on general issues you could talk about to pick 4 marks. Okay, so let's appraise the product mix performance based on the data we have. So from the calculation in the table in the appendix, you see that revenue was calculated based on the number of queries and the calls the operators and the consultants were able to attend to. So from appendix 2, you will see that the first service line has 2,500 queries. It generates 100K or 100,000 naira. So the MIS also has 1,000 queries and also generated a higher revenue due to the higher service price of 220 per query. Home service generated 2,000 or 360,000 naira based on 2,000 queries, having their biggest pricing strategy, while business internet service generated 250 queries with a revenue of 75,000 naira but its overall contribution is lower due to higher operational costs, which we stated in the appendix, which is Appendix 2. All right, so the second point we could pick from the appraisal of this product mix is the mobile telephony service cost of 40,000 naira. You could also see that for mobile internet service, a cost of 12,000. For consultants, another 12,000, which amounts to 24,000 overall. For home service, it's about 84,000 and 24, which a total of 108. And for BIS, we have 15 with a significant consultant cost of 20,250, and everything we have 21,750 for that service line. So the high consultant costs from all these service lines necessitates the need or the need for specialized skills, reflecting the operational intricacies and the impact of these costs on overall profitability. Okay, so we could pick another point from the contribution margin from the table we calculated in the appendix. For the MT, we see 60,000 contribution. For MIS, 196. For HIS, 252. Or for BIS, 53,250. These contribution will all remain positive based on what we've calculated from the data, and we referenced the appendix. The number 4, could talk about the contribution per limiting factor based on what we've calculated. Just discuss all the 3 contribution per limiting factor. So for mobile internet service, we see that it stands out as the highest contributing per limiting factor of 8,000, showcasing its optimal use of resources and strong profitability. So we'll see that MIS should focus on enhancing the resources of business internet service and home internet service to leverage the strengths of mobile telephony and mobile internet service. So we'll see that calculation graphically in Appendix 2, which we referenced here. And finally, the center operations could be optimized by ensuring that the operators and the consultants with their compensated pay of 60 and 90 per hour could be upgraded, and this move will help drive the staff to perform well and to also ensure service efficiency and cost effectiveness in its call center operations. This is very important. Okay, so these tools, professional tools we've used in the second header, we've spoken to the service or product mix of MNC, and we just describe the numbers in the appendix. Okay, so let's now display our analytical skills, which we call evaluation of the product mix contribution. So we're evaluating what is in that same appendix on the contribution of each service line. So you will see that mobile telephony is 60, MIS has the highest, 196, while home service follows the first highest, 252, while BIS dropped 53,250. So we are analyzing that MIS and HIS significantly contribute to the company's productivity, highlighting the importance to focus on their services for growth. So that's what we're evaluating here. Number 2, the analysis of the call center operation indicates an excess of operator hours, and we could see that based on what we've calculated based on the hours, approximately 1,291 hours is what the operator needs for services to be rendered. So the result in the excess of these operator hours suggest that the company has the potential to reallocate these surplus hours to enhance some service areas and reduce operational costs by optimizing their staff levels. You can also see that in the second table in the appendix. Okay, so the third point we could derive is also the scarcity of consultant hours in comparison with the operator hours. So if you look at the calculation here, we are speaking to the fact that there is a shortfall of about 662 consultant hours compared to operator hours. So this indicates that the company is struggling to meet customer demand effectively. And this scarcity highlights the need for the company to either increase the number of consultants or upskill operators and upgrade them to consultants. So those are the options that are obtainable, and this is to manage the workload more efficiently and ensure satisfactory customer service. Okay, so number 4, we're looking at the contribution per limiting factor, and for MIS we see it as 24.5 naira, HIS 4 naira 50 kobo, and for BIS 3 naira 90 kobo. So we see that MT does not have a consultant time, so its overall contribution is less favorable at 60,000 due to its low contribution margin per service inquiry. Now, this analysis suggests that the company should prioritize mobile internet service to maximize profitability, since it has the highest contribution per limiting factor. That will be the fourth point. And the fifth point we also stated here is the appropriate ranking of services based on the contribution per limiting factor. And we see that the ranking can guide the company in resource allocation and strategic focus to ensure overall profitability. So the service line with the highest contribution should be given priority based on their contribution per limiting factor. This is very important. And also number 6, we're looking at the product mix for the company, which includes diverse range of services, and which we have stated 4 of them here. And we're stating that the diverse mix allow the company to tap into various market segments, but prioritizing these services based on their contribution will enhance profitability and operational efficiency. So we just need 4 explanations here under our evaluation or our displaying our analytical skills, but then I gave you 6 here so that you can have a plethora of discussions you could garner out from the appendix 2 calculations. Okay, so let's look at the challenges and considerations aspect of our requirement 2. So number 1, we're looking at the total revenue generated amounts to about 755,000 naira. Home service has the highest. Home internet service, has the highest, 360. MIS mobile internet has 220. The total operator cost 75, while consultancy cost 116, and the contribution is 561, which is in the appendix. You see that the contribution per limiting factor also are these amounts. Now, these figures highlight the need for strategic adjustments, such as considering operator upgrades to consultants to optimize resource allocation and enhance profitability within the service mix. So this is a consideration based on the contribution we've calculated, and we're recommending, or we are stating here, a challenge or a consideration that operator be upgraded to consultants to enhance their resource allocation. So number 2, negotiation and managing relationships with the consultants is essential for Magic Network to enhance operational service or efficient service delivery. So they could do this by slightly reducing or increasing their wage per hour. They can also ensure that the workforce meets their demands in peak periods. Very, very important. So this approach helps balance workloads, and also this strategy can lead to improved customer satisfaction through better service response time, while also optimizing labor cost and enhancing overall profitability. So this is a consideration to enhance to ensure the or advise the manage and negotiate their relationship with the consultants for better operational efficiency. Okay, so number 3, the effect of the increased wage bill from hiring additional consultants on the company's profitability is crucial for planning and sustainability. So while employing more consultants can enhance service quality and customer satisfaction, it also leads to higher operational costs that needs careful evaluation. So this is a challenge that must be addressed holistically. So the investment in additional consultant translates to greater customer retention and increased revenue streams, which will ensure overall financial health in the company and robust service delivery. So this is very important, that the address of increasing the wage is crucial. So we are considering that as a consideration and also a challenge, All right. So number 4, the effects of the upgrade on the morale of consultants and operators is essential, as it directly impacts workplace dynamics and employee retention. So upgrading operators to consultants may create a sense of recognition and also career progression or promotion for those individuals, and this will boost their morale and job satisfaction. So this is also a consideration to make staff feel valued and motivated, and this will lead to improved performance and service delivery at Magic Network. So this is also a consideration. So most of the considerations and challenges are integrated together, which is good, and the way we stated it here is important. So number 5, we gave you a 5th point, but you need just 4 in each parameter or each header. So the possibility of operators not being ready for an upgrade is crucial, as it can impact both service quality and employee confidence. So we're looking at more. Some operators may lack the necessary skills or expertise to handle the responsibility of the consultant, maybe based on their qualification and experience, so potentially leading to suboptimal or subpar customer service and increased frustration among clients. So in a situation whereby operators may not be able to attend some specific and classified needs of clients, we need to assess the readiness of the operator to transition or be promoted to the consultant role. This is also a challenge, and ensuring that the operators are ready to take over or take up consultant role ultimately will help us maintain our service standards and support the overall effectiveness of the company's operations. Okay, so having looked at these dynamic challenges and considerations, let's look at ethical issues, which is very, very paramount. Now, the first one is talking about the reliability and errors in recording operators' hours, inconsistencies in cost allocations of the services, and how well can we trust the data? Because these minutes, the consultants' hours, and everything that was projected in the requirement too needs scrutiny and further reliability to ensure that the data were not manipulated and the integrity of the revenue and contribution reports for each service lines are true. So we are skeptical about that based on the issues of internal controls and business processes we found from the case. We are doubting the data, which we are calling out here in number 1. Then number 2, decisions made by the company regarding staff, service pricing, operational adjustment can also significantly impact both the staff morale and customer satisfaction. For instance, upgrading operators to consultant can create a sense of advancement and recognition among employees, boosting their morale and productivity, of course. However, if not managed properly, such changes could also lead to resentment among consultants to feel their expertise is undervalued. Yes, and it will in turn culminate in decreasing overall morale. So we need to manage these issues of upgrading operator to a consultant role, especially if they are less qualified than the consultants. It's necessary to handle that critically. Also, additionally, we're looking at price adjustments leading to increased costs for customers. It may cause dissatisfaction and drive them to seek alternatives. So, the company needs to carefully consider the implications of its decision on both employees and customers, fostering open communication, ensuring that changes are aligned with their expectations and need to maintain a positive organizational culture and customer loyalty. So these decisions are very critical and we need to be skeptical about it to bring it out to the board. So number 3, adequate training of staff is essential for the company also. And we're looking at the satisfaction of customers. The more you train your staff, the more they perform, and in turn, your customers are satisfied. Richard Branson, one of the business magnates, used to say something about satisfying your staff, that his staff is his priority, because he knows that a satisfied staff will provide good service to a client. Okay, so having said that, MNC, we are looking at the ongoing training proposed will help employees stay updated on product, services, and technologies, allowing them to provide informed support in the rapid changing business environment, which in turn culminates in operational effectiveness and strengthening its competitive position in the market. So, staff training is essential and we are skeptical about that. That's why we are pointing it out in our professional skepticism. And finally, the survey conducted by the marketing department might be padded. So we are skeptical about that because the result or reported result could have been exaggerated or manipulated to present a more favorable view of customer satisfaction or market demand. So we are skeptical about the sample size that was taken, the biased responses. It does not really reflect accurately the true sentiments of the wider customer base. So we are skeptical about this and we are pointing it out because we don't want to mislead management to make informed decisions based on that. And this could affect strategies and fail to meet customer needs or market conditions. So these 4 issues are what we've pointed out as ethical and critical matters, which we must point out as a header in the case study exam. Take note of that. This is very important. Okay, so on the final header, we're looking at risk assessment or assessment and evaluation of the findings. So we speak to implementing a call service system with an automated assistant. This could significantly enhance the risk of customers' dissatisfaction. Such system like AI 247 technology will help respond to customers' needs, thereby enhancing service accessibility and responsiveness. So the company needs to leverage AI as a positive risk. AI has come to stay, which will help do less or do more with less, in the words of the Microsoft CEO I stated earlier. Okay, so we're looking at the new staff, the right staff to be hired with the appropriate training and qualification is crucial and is a risk to hire the wrong staff. This is very important. So ongoing training for staff members and equipping them to meet customer needs in this industry trends is very important. It will impact service delivery and customer satisfaction. Moreover, well-trained staff can handle inquiries more effectively and efficiently, reducing response time and fostering loyalty among subscribers, culminating in long-term success of Magic Network's business program. This is very important. So we're also evaluating the use of alternative methods of analysis, like common size analysis, trend analysis, to significantly enhance the company's decision-making process. So common size analysis allows for the company to evaluate financial statements, and also this approach identifies areas of weakness and strengths in cost management and revenue generation. Trend analysis also helps identify patterns and forecast future performance. So they could assess these risks or evaluate to gain deeper insights into the financial health and make informed decisions that align with long-term objectives. So this third assessment is what we've looked at to help the company arrive at good bottom lines. Okay, so number 4, we're talking about engaging an external consultant to analyze subscriber data. This can provide the company with objective insights and specialized expertise that may not be available in-house. So external consultants could provide good out-of-the-box solutions since they are not within the organization, and this could help provide a more objective approach and develop targeted strategies for customer retention and growth while optimizing operational efficiency. Okay, so in conclusion, we're concluding that the center with the scarce resources, particularly the consultant hours and the operators also not being capable of meeting some of the customer needs, we're concluding that these constraints for high demand service has led to the greatest contribution margins. So we need to strategically manage the allocation of scarce resources to enhance operational efficiency and maximize profitability. So as the demand for services grow, we need to recruit additional consultants to address these service quality gaps. It's very important. So we are concluding on that. And number 2, we're also concluding on the product mix. And these are the service lines, the 4 of them. We're looking at the overall financial performance, and that the total contribution for these services indicates that the resources we're using to generate profit, we need to leverage AI and other tools to enhance them. If we do that, it will enhance profitability and ensure sustainable growth in the competitive market. This is very important. And number 3, we're looking at the staff needs, especially of the staff, those in the call center. It's crucial to identify the number of operators that need to be upgraded to consultants to optimize service delivery and profitability. Also, the customer satisfaction and service efficiency is hinged on these staffing needs. So if we are upgrading operators to consultants, we need to also ensure that they are upgraded in their financial aspects also. So where in the case you upgrade an operator without any financial benefit, will not do good to that operator. So upgrading them to consultants should also be attended to with financial benefits, which will help contribute to their satisfaction and increase their morale, and thereby contribute to the company's financial outcomes also. Okay, so number 4, we're looking at the additional staffing and service delivery considerations should address critical issues and also their compliance challenges. The fines and reputational damage should be addressed, because these threats that are external to the company can impact their bottom line and their patronage. Also, the economic environment, including fluctuations in customer demand, government policy, must be monitored closely to inform their strategic decisions. If these are addressed, these challenges could be navigated, providing more effective and capitalize on the growth opportunities of the company. Okay, so our recommendations would be that the company should prioritize the evaluation of accuracy and reliability of information as it relies decision making. So this is important because misleading and inaccurate information could lead to poor strategic choices. So how should they do that? They should implement robust verification process and regularly audit their information sources. So external audits, independent audits are necessary for MNC's financial and non-financial data. So this enhances decision-making capabilities and more informed organizational culture that responds effectively to market demands. Okay, so number 2, we are recommending a comprehensive approach by integrating both financial and non-financial information in their processes. So integrating this framework will enhance competitiveness and drive sustainable growth. So the balanced scorecard model that was provided in the analytics will gain a holistic view of its performance if it's put into use or if it's implemented. It will enable us identify or enable the company identify areas of improvement and align its strategic initiatives with the financial aspects and customer expectations of the company. Okay, so number 3, the company must prioritize maintaining up-to-date data to inform resource allocation and other strategic decision-making process. So we're speaking to the fact that if they leverage analytics and AI, which is the way we are recommending they should go, it will optimize workforce, streamline processes, enhance customer service, ultimately improve profitability and competitive advantage. So that's how we expect them to be up to date in their data. Leveraging these analytics and AI using big data, you could regularly update this data seamlessly. And this decision making or this decision support system could also help foster proactive approach to managing business operations in a very, very suitable manner. All right, so number 4, we're looking at establishing comprehensive budgets for self-monitoring and financial control. So we are recommending that detailed budgets of clear financial targets, allocation of resources is implemented, and this would align with strategic objectives. So regularly comparing your variance to your your budgeted to your actual to get the variances will help them understand reasons behind these variances and take corrective actions immediately. Now, this disciplined approach not only enhances financial accountability, but also promotes informed decision making and helps the company's operational efficiency, ultimately leading to sustained growth and financial health of the company. So don't forget to sign off who you are in the case, and that will be the end of your recommendation. Okay, so like I stated earlier before during the first break where we went, I stated that these are the appendix, but then I've also provided comprehensive tutorials, as you can see on the screen, for the appendix 2, which is requirement 1, and also I've provided for the explanation to the ratios, and also I went ahead to provide tutorials step by step on how to calculate the contribution margin, the limiting factor with step-by-step data and figure. I did a lot of number crunching with little explanations. I broke it down in bits for you to understand. I took some pages to do that, which will help you practically. All right, so having looked at the discursive aspect, let's look at our executive summary. So we talk about what the report is about, the aim of the report, and the tools we use to analyze the report. So requirement 1, we used balanced scorecard and ratio analysis, while requirement 2, we used contribution margin. So we just spoke to the first and the second requirement here, while we spoke to the method of analysis, which includes ratio analysis with the model and the marginal costing approach. distribution analysis, limiting factor, and we said all our calculations are found in the appendix. Okay, so we assume that Magic Network is in the growing state of its life cycle. All right, so let's talk about the important aspect of the executive summary. So we quoted the executive summary here by stating the requirement 1, and also we said the revenue, how it grew, gross profit. We spoke to the company's net profit, and we also look at from the cost area. We looked at cost of sales that led to this gross profit, and we spoke to the selling and distribution that led to the profit before tax, and the final tax that led to the bottom line. Okay, so categorically, the conclusion is what is important in your executive summary. So we succinctly and summarily concluded on the first point, which is the subscriber growth and operational efficiency, balancing performance measures and investing in staff training while tackling staff challenges for sustained success is essential. So we spoke about number 2, the financial ratios, which we calculated on profitability, liquidity, and efficiency. We're looking at these ratios to help make informed decisions and stay competitive in the market, is our conclusion. While number 3 is external factors like government policies and economic shift must be adapted to, so that we can use these opportunities while managing risks to stay competitive. And number 4, integrating SWOT. Quarter 5, we also concluded that with balanced scorecard could enhance operational effectiveness and align better market demands. Okay, so based on requirement 1's conclusion, we're also recommending that they should adopt a comprehensive customer relationship management system, leveraging AI for customer insights and staff training. So this is our recommendation. Number 2 recommendation is to create a strategic framework that aligns the financial and the market trends regularly. Financial goals and market trends should be aligned with this strategic framework. This is our second recommendation. And our third recommendation is to focus on tapped rural markets by offering tailored services at available prices. Very important. On number 4, we use the balanced scorecard and other models to enhance performance by optimizing margins. So these are our recommendations based on what we've concluded on. All right. Now, requirement 2, we looked at the inquiries based on the total number, which is 5,750. We just spoke to the general minutes, particularly the business internet service that has more of the operators and the consultants. We'll talk of the second point here, which is the workforce consists of 100 consultants, 100 operators, 85 consultants, and the amounts they are being paid per hour. Okay, so very importantly, now we looked at the conclusions, which has to do with prioritizing high demand services at MNC. Also, we talked about the need to hire more staff, and we're concluding on the implementation of automation to maintain service quality and also support growth. Okay, all right, number 2, we're looking at mobile internet and home internet service should be prioritized. Prioritized in the sense that it will enhance profitability, sustainable growth by aligning with customer demand, because they have high demand from what we've calculated in our data analysis. So we also looked at our conclusion on upgrading operators to consultants to enhance service delivery and to also help the consultant manage their hours also. Also to enhance operations by addressing compliance, competitive technology and economic changes adequately. So we're recommending that they must verify their data to improve decision making and customer satisfaction. Also, They need to integrate financial and non-financial data to enhance decision-making and analyze strategies with customer needs. And also, the company must use real-time data to optimize resources and improve decision-making to boost profitability. This is very important. And also, we recommend the use of budgets to improve financial control and resource allocation. So our conclusion and recommendation is just a succinct and comprehensive snapshot for what we have in the detailed discussion of the report. Okay, so the introduction aspect is just a brief overview, our skepticism, then the report outline. We will just use this page to pick 4 marks, and also the background is about the company and the scope which we are limited by, and the documents we don't have or that was not provided to us by the examiner to pick another 4 marks. Okay, so let's go to the cover page. Don't forget, the cover page has to do with an external report, which is a letter format addressed to the board. Also, the report which is on the requirement 1 and 2 summarized, prepared by you in the case. Also, the date, then the disclaimer, which is for an external report. It's not needed in an internal report, but for an external report. So don't forget, we integrate all these in the report, and your planning time helps you to structure your report properly and adequately to pick all the marks. Okay, so in the absence of any questions, we'll close for the evening, and thank you very much for your time.